Good morning. It is Thursday the 12th at just after 8 UTC, doing a Bitcoin update. So from yesterday to today, wow, what a crazy flush out on the market open. Then the CPI data kind of like settled and everything started reversing and trading up again. So beautiful flush out of that local long liquidity, good higher lows, good retest of level. We'll go through it. So the first thing, obviously, we were watching this yesterday morning as it was coming up. It was looking really bad because, increasing long short ratio basically means that there's an incentive to push price quickly back to the downside, which is what we got on the New York Stock Exchange Open after we got that CPI data. If you look a bit lower, it's actually been very, very well since the evening yesterday. So overall positive. I love the fact that we went back up close to 70%, and now we're trading back at under 60% on the longs versus shorts. So this is good. We want people to continue trying to shorting into an upside move. That's why we've broken the 58K and above. Pretty strong taker volume right now as well. So we're getting some pretty big market smashes. So we'll run through that. The local liquidity is pretty simple. We had the move down yesterday. We actually missed the bigger block, which is good. It basically means that the incentive to then drive back up as we started higher lowing it going into the evening was actually pretty strong. So nice continuation move. We didn't break the major levels. There's still a lot of liquidity here. I would only want to see that targeted to the downside if we do start breaking some significant levels. Likely a loss of the lows here at 57.3. If we lose the 57.3 low that we put in yesterday, I would want to then see probably a deeper correction back down to that liquidity. But as long as we hold that low that we put in yesterday, it's still upside trending. The problem that comes into play, which I'll show on the trading view chart, is losing the low that we put in yesterday down at 55.5. If we lose that, there's the argument that we're actually locally distributing, which we don't want to see. So for the time being, liquidity looks strong. It's still stacking above us in this kind of flat that we're in, so this is good. If there's some local failures, even at the local stuff at 58K, we could be seeing some potential flush into that kind of liquidity to retest structure levels from yesterday. But for the time being, looks fine for the most part. Until we actually start failing something, we still have to look at the continuation as the most likely course of action. If you look a bit higher time frame on the liquidation as well, yeah, it is getting juicy below us, but again, on the higher time frame, if that's the 1 week, we've still got plenty that we're very close to. We're quite far away from the bigger stuff below us. And we're getting into that kind of older short liquidity that's been stacking for a while. So basically, since the end of August, we've now built up all that stuff, getting us back to 60K. Now, it is Thursday. There's some major levels we want to stay above, which I'll go through as well. But the weekly time frame is going to be really important, and I'll mention it more on tomorrow's update, because the Sunday close is kind of everything depending on where we actually retest and fail. So it's kind of like on the cusp of doing something really bad or deviating down and then regaining something good, which I'll explain. For right now, looking over at the funding rates, generally, yeah, neutral, negative, which is fine. BitMEX even being negative, which is good. Bybit is a bit of an outlier there, and Binance, I'm assuming. In general, the majority of the volume is still being traded negative, so that's good to see. And then finally, economic calendar. So we talked about the importance of the CPI. Yeah, we had a 0.3% more than the forecast, but in general, that 2.5 is the lowest CPI rate, I think, in 3 years. So even though it was as predicted, it's still good. It's still meaning that rate cuts are coming. Now the question is it 25 basis points or 0.25%, or is it 50 basis points coming in next Wednesday on the 18th? Today, we've got also big stuff coming. The important thing here, initial jobless claims and PPI. That's going to be the big one for the U.S. markets. Also, ECB lowering interest rates forecasted 3.65%, which is a drastic reduction. Again, this is good. In the higher time frame, this is for a major continuation, is still likely before we go into some kind of like doomsday recession depression scenario, because everything's basically just printing money. But the printers are going to go, and that's a good thing. Looking over at trading light, local levels, very simply, we talked about that being kind of fake. I thought it was fake. It was fake. It got pulled as we broke back down to it. We saw some nice stuff stepping in to kind of reinforce the upside move. Locally, that kind of flush out of liquidity. So we actually caught quite a bit of people in this upside move trying to short the failure, which is nice to see. So in general, the open interest wasn't massively increasing. Actually caught quite a bit of the shorts, the local shorts got tabbed before we nuked. And then we started taking up the longs. But since then, it's been pretty decent in the overall move. There's some stuff stacking above us, 58.8, 58.7. It's not too crazy. Some of it looks organic, some of it looks fake. Like that looks fake, that looks fake. But generally, there's definitely some short orders there, some stuff stuffing in below. Not too concerned until we start losing, 57.9, that low that we put in an hour ago. If we start losing that, then we have to come back to retest us 57.3, and that's where I want to see holds. I don't want to see us break back down to test the lows. We can, but that just shows general weakness if we're not even able to hold local higher lows. Looking over at the TPO, again, like yesterday, it was looking really rough. We got retest failures that went lower to retest previous volume. Now we're back above, solidly looking pretty strong. If we do come back to retest stuff, there's some decent stuff, 56.6 for a nice retest level, could clear some local lows. Again, the better the retests are when we're trending to the upside like this, the more powerful the drive is, the more strength it has overall. So just remember that. And then finally, looking at the footprint, we talked about that cluster there. We actually had a pretty decent move down to retest stuff. That's already done. There's another one. There's another big inefficiency block or imbalanced block here at 56.5. Again, if we do have some local failures, I think that should be a local target. But remember, we're upside trending. You're looking for higher lows. Don't try and just short into an upside trend. That ain't it. Finally, looking at the order flow that we've had, it's been very, very green this morning, but kind of topping here at 58.2 on the 4 hour. Still overall bullish because of how we've expanded, but there is a definite large amount of long liquidity that's very local to the current price action. So I would say that if we do start closing below 57.8, start breaking some local structure, you can put these guys out of position really quickly with a move down probably to something like that, to 57K, punish a lot of those late longs, retest some levels, but overall, it's still looking pretty decent for upside continuation. And then finally, looking over at Trading View. So we talked about the move yesterday. We actually had like a liquidity grab that moved back down to test that initial step off point. So that's done. I don't want to see that happen again. Same thing there. That's done since we bounced really hard off it. These are all levels to hold at this point. That low that we put in here, that needs to hold. At any point, if we were to break down, say, do something like this, and then make a new low, and then come back, like whatever we do, like basically tracing out this structure, what happens then is you're actually distributing. And it'll trick a lot of people to try and long into an upside move. So we don't want to do that. We want to hold higher lows and have continuation moves. For the time being, you're still looking up. There's good support now. Like this big level here has now flipped from a bearish resistance zone to support. So previous weekly open, 57.3, 57K, all looking for support. It's losing this stuff that starts to break stuff to have retests lower. That's also done. So yeah, overall looks positive for potential continuation. We're in that we're close to a major liquidity pocket, and the big thing to get above now, we want to see this Thursday, Friday, get above 59.5. The stuff that we don't want to do, and I'll show this on the very highest time frames, is basically that low, right? 55.8K. We don't want to see closes underneath that at any point. That's worst case scenario. And the reason for that is if we close below that level, what have you actually done on the weekly time frame? You have lost the previous low and bearishly retested it, and that's on a close underneath this level. So again, that's the priority by end of the week. Intraday, it's upside continuation looking strong. If there's going to be some local pullbacks, look for some local failures. And I would say 57.9 is your first kind of local failure that could force a retest back into the structure. So until then, enjoy the upside and catch you tomorrow. Peace.